If we take a trade, I'm not sure we will take a trade today, at least for now. We will switch to another Apex account. So the strategy I use for prop accounts, since it only makes sense to use 50K accounts, they're easier to pass, basically means cheaper, less attempts and less time. But yeah, I mean, like it's you can almost guarantee if you're more or less familiar, you know how to do it. But you can almost like pass any account from first attempt. The problem is you will have to trade it like carefully with smaller risk, and it will take a lot more time. With this Apex, usually it takes two, three accounts to pass one because you want to pass it in a couple of trades, basically in a day at most. And well, time is money, so you pay more. And with PA accounts, it's the same. Just you lose much more. If you lose PA account, you pay to activation and all the evolves to pass it. So what I'm doing is I'm just building a stock of them and I'm rotating basically. I take a trade as long as it's not break even or just very small up or down trade, doesn't matter. So as long as it is some kind of meaningful trade, half to one risk plus or minus, then I will just rotate to another account. So let's say if I have like 5 accounts and I take 10 trades, meaningful trades a day, it means I will be rotating and basically randomizing them between 5 accounts. So each account will actually take only 2 trades. So you're spreading the risk instead of going micros and paying 2.5 times more commissions, because if commissions on micro are ridiculously expensive. It's like one tick on mini, like $4 commission, right? $5 tick, so it's less than one tick. But on micro, it's 50-cent tick, but $1.2 in and out commission round trip. So it's like almost 3 ticks, which is bad. So that doesn't make sense. So it's much better to just keep rotating them and randomizing trades. It's basically like Monte Carlo. If you're familiar with Monte Carlo analysis, you just take a bunch of trades and just randomize the order of the trades. This is how you get like your best, worst returns thousands of times, because it's just reordering trade, doesn't create any new trades, just reordering existing trades. So you see, what's going to happen if you like have like 10 trades losing in a row. Will you blow your account? Will you have like disastrous drawdown or something like that? So that's how Monte Carlo works. So what I'm doing is like, because the order of trades semi-random, I would say. Not semi, because it's market is not like totally random, right? It's moving in regimes, right? We have like impulse trading mode, and we have choppy, range trading. So basically, if you get in a chop, it's more likely you will lose a couple of trades in a row. If you get into this kind of trading phase, you're more likely to win a couple of trades in a row. But by rotating these accounts, you're actually kind of spreading it and mission and mashing, mixing this stuff, so they get more even returns. So that's not a terrible idea. Obviously, it doesn't make any sense for live accounts, but for prop accounts with very tight drawdown, yeah, I would argue it's a good approach, and commissions are killer. It's People underestimate the power of commissions and how much weight they put on your trading, especially if you trade actively. I mean, if you're taking a couple of trades a week, it doesn't really matter.